Hey guys, welcome back to Study Crypto. We really appreciate it. Thanks for tuning in. Today, we're going to go over Alpha Nodes, which is a new node project on the AVAX Avalanche Network. But first, please do us a big favor. Hit the like button as well as the subscribe button if you already haven't. We really do appreciate it. It helps get these videos out into the YouTube world. And as always, this is not financial advice, and I am not a financial advisor. And keep in mind, crypto investing is high risk, so definitely proceed with caution. All right, guys, so let's get into it. Alpha Nodes, it's a new project on the AVAX Smart Chain, the AVAX chain, and the Avalanche chain has got a lot of projects going on. This is just the newest thing that's popping up. And I looked at this project. A couple people have been speaking about it a lot, and I'm going to let you know my thoughts on it. I mean, number one, this is considered a node. They call themselves a node as a service, but in fact, it's really DeFi as a service. If you look into their docs, what they do is you buy their coins and they do reflections, where basically you're earning rewards based upon the reflections of what they invest in. And if you see here, what they're investing in is coins like Strong, as well as Vapor nodes and other DeFi projects, as well as THOR. So you're investing in alpha nodes, and they're paying you out in things like THOR, Vapor nodes, PXT, and so that's kind of basically the way it works. Okay, so some of the good things about this is, it's a fixed supply. They definitely have a fixed supply of their token, okay, which is very nice. And it's not locked up like with Strong and many of the other nodes. When you purchase those tokens, they're locked up, and you only get the rewards that you receive from your compounding on a regular basis, from your rewards on a regular basis. And so those are really nice things. And they just added a multi-sig wallet to their Treasury, which is nice. That helps build some type of trust with them. Okay. And if you look here, they've had some pretty good price action. They've only been out for a few days. And as you see, they've had some price action, as you know, with any kind of new project that pumps on the first day. And then it did take a dive a little bit, but it definitely rebounded and it's starting to move up again. So, that's definitely a good positive. It seems like they have support right here around the 0.801246 line, whatever that is, right? So that's really good. They do have positive price action. We definitely like to see that. It wasn't a pump and dump scenario. However, some of the cons that I have with this project is that number one, the team isn't doxed. We don't know who this team is. Um, and the team, there's no KYC. They don't have any real KYC plans mentioned here. And if you look at their white paper, which is what we're on right now, it's very bare. It's bare bones. It's not really anything here. Now, in terms of how you get paid and the rewards, I know that's what everybody wants to know. They have a really vague way of explaining it here. And they do offer a calculator spreadsheet right here that you can go to make the calculations. But what I did is instead of going through this with you, I'll just go over what I calculated. So basically, if you bought 1 trillion of their tokens, right, which is crazy that they have that many tokens, even though it is a fixed supply, it's 1,000 trillion fixed supply. So if you bought 1 trillion of their tokens, that would actually cost you $2,716. Now, based upon that and today's price action that we have, That's going to give you a reward of $42 per day. And that's going to annualize as a reward of $15,330 per year, which sounds pretty good. Now, when you do the math, off of your initial investment of $2,716, you're actually getting a 564% annualized return. Okay, 564% annually, which is really good. That's paying higher than pretty much most anything we've covered here. Okay, which monthly, that's giving you a 47% monthly return. Okay, and when you break that down daily, that's 1.5% daily. 1.5% daily. Now, as you see, they have this calculator here. You can go through that. The numbers I gave you with the daily and the annual, I just broke out that math on my own for you. That'll be in the notes as well in the description, so you can take a look at that. Yeah, so we'll talk about those numbers too. They sound really juicy, I must admit. When I heard those numbers, I was like, hey, this sounds real nice. We're going to talk about some of the issues with those numbers. So we went over the pros, right? There are a reflection token. It's a fixed supply. Your initial investment is not locked up, and it does pay rewards in popular projects like THOR, Vapor Nodes. I'm not sure what PXT is, but THOR and Vapor Nodes, we all know about those. Now, someone had mentioned on YouTube that these guys have some unique code in their project. I didn't really see any evidence of that. It seems like typical code. One cool thing they have is that if you have a certain percentage, I didn't get the actual percentage. If you own a certain amount of nodes, you will be airdropped NFTs. So they do have an NFT airdropping system as well. Now, this is trading on Trader Joe on the AVAX network. Now, keep in mind, if you do participate in this project, you're going to have to raise the slippage kind of high, up to 25%. That's because it's low liquidity, and low liquidity projects tend to need higher slippage in order to allow the decentralized exchange to fulfill your order. That doesn't mean that your price is going to be off by 25%, but the system needs it that high to actually try to facilitate your transaction. So keep that in mind. If you do participate in this project, you're going to need to raise your slippage on Trader Joe, which is the place where you purchase this. You're going to need to raise that slippage to 25%, maybe even a little bit higher. Okay? So those are the pros. Interesting project. Now let's get into the cons. What I didn't like about this project. So the con is that if basically it's functioning off the backbone of other projects. So, for instance, I don't think they mentioned Strong, but if Thor or Vapor Node was to fail and the price goes down and is no longer sustainable, then this project fails. Okay, so this project is solely reliant on these other projects. Okay, another thing to keep in mind is there's a 6% tax that they hit you with that goes back into the treasury, into reinvesting, and so forth like that. So keep in mind the 6% tax. Okay. So one of my issues is that the project is heavily reliant on other projects to maintain. And so that's not, I don't really like that. Okay. So just wanted to touch on this tax. There's a set the slippage to 22%. So again, they're considering the slippage up to 22% as part of the tax. And so I guess there's some way that you're actually being forced to pay up to that percentage. And so it's 10% of that slippage amount goes to dividends and reflections. 2% back to the liquidity pool, and then 6% back to the alpha fund. So yeah, so just keep these taxes in mind. I guess they do force you up to 22% of that tax, so just keep that in mind. Um, Another thing I don't like about this, okay, they bill themselves as a NaaS, as a node as a service, but they're not. They are not a node as a service. Node as a service, as is when you purchase something like a strong node or any of the other nodes that actually perform on a blockchain in terms of doing validations. Okay, this project isn't doing any validations except through proxy of purchasing other node projects that are doing validations. So this project is not a node as a service, it's DeFi as a service. It's basically what they have in IaaS, an investment as a service. Okay, that's really what this is. It's basically a VC fund, okay, where that invests in various things. Now, one of the things I don't like about this, again, is the slippage. You know, we spoke about the slippage. The slippage is not cool. You have to play with that slippage to get the proper price. And like I said before, there's no KYC, which is a bad thing. No KYC. There's no docs. It's not docked. There's no audit. There's nothing going on here. So yeah, keep that in mind. Now, one of the things I also don't like is that the Treasury funds are all based upon group voting. Now, group voting might sound nice in theory, but ideally, if I'm investing in a VC fund, I don't want to be voting with a bunch of other people who are just like me, who may not be as savvy as I am, to decide what's done with the funds. That's the purpose of investing in something like this. Otherwise, I could just invest my money wherever I want myself. It'd be nice if there was a accredited leader at the head of the ship deciding where the investments are going, but there's not. It's all the community investing. I think community deciding where treasuries go is a bad idea. If the community was good at investing their funds in various projects, they wouldn't be in that project. They're going to that project to get a better yield. And then the project itself is turning the table around and say, no, you guys tell us where you want the money to go. And who's to say that the people investing in the project are the smartest people, most informed people to actually do that? So I don't like the idea of having a treasury that's controlled by the group that's just investing in them. I want to have some opinions of some seasoned people who are doing very well in this space. So that's a con. And obviously, we spoke. You can see here. I mean, their white paper is paper thin. It's just a plug and play. They ripped this off of somewhere. This is nothing, to be honest with you. This you could. This is plug and play stuff here. This is nothing. There's no originality. Okay, so that's a bad thing. And if so here's the biggest problem I have with this thing is the protocol itself. Those profits that I mentioned, that 1.5% per day, that's higher than many of the projects that they're investing in. So again, we're taking a look at these numbers. If you have 1 trillion tokens, that's going to be $2,716, which based upon their current math and their current reward structure is rewarding you $42 a day. And that's an annual reward of $15,330. And that's going to be a total of 564% annually that you're rewarded, or 47% monthly that you're rewarded, or 1.5% daily that you're rewarded at these rates, which is totally crazy because when you consider this, if you take a look at our spreadsheet, we're going to make this available to you guys soon. So if you take a look at our spreadsheet, Again, this is something that we're going to make available to you guys at some point. We have a bunch of the most popular node projects listed here, so you can take a look at how much they cost to get into. This is the token price. This is what's required to create a node at the various tiers that some of these projects have. So this is the total cost of a node on these particular projects. And this is giving you the rewards per day, okay, as well as your annual profits and ROI and some other information. Neat, handy little spreadsheet to help you track the most profitable nodes. We're going to make this available to you guys moving forward at some point. But if you take a look at here at the rewards per day column, now the rewards per day, as you see, even at the highest level, you have THOR node, which is paying 1%, okay, 1%, a little over 1% per day for their reward, okay? That's what they're paying. So, I mean, it's not really sustainable if the most and that's one of the more expensive nodes, 3,400 for the Odin node, okay? Um, Hey guys, so if you look here, this is our most profitable node spreadsheet. We keep track of all the different node projects that we think are worth putting on here, and we break down how much it costs to get into them, the annual return, the cost of a node at the various levels, the rewards per day, your profit per day, your days to break even, and a lot of other information. Okay, so we're going to make this available to you guys at some point in the near future. But for right now, just to give you an idea of sustainability here, if you look at what Alpha Nodes is doing is they're investing in many of these nodes, and then from there they are rewarding you. Well, for instance, if they're investing in Vapor Nodes, and Vapor Nodes is only giving you a ROI, annualized ROI of 365%, which is 1% per day. How is Alpha Nodes able to pay you 1.5% per day? Okay, that doesn't make sense. And for instance, if you have THOR nodes, if you have the Heimdall THOR node or the Freya THOR node, okay, those are only paying less than 1% per day. These are so because 1% per day is 365%. This is far less than 365%. So it's paying far less than 365%, which means it's paying far less than 1% per day. But as we broke down the math here, these guys are paying out 1.5% per day. How can they pay out 1.5% per day on an investment that they're investing in when that investment is only giving out less than 1% per day? How are they able to pull that magic formula off? Well, I'll tell you how. They can't. It's not sustainable. These numbers simply just aren't sustainable. And for this reason, this is not something I would actually put any real risk capital in. I'd throw $1 or two in here if I was just curious, but it's not something I think has any real legs to it. So because of that, that's pretty much my conclusion on the Alpha Node project. So, in terms of a score, we have our scoring system, and in terms of utility of this project, I give it a 4. The way the study score works, each category is 1 out of 10. The highest score you can get is 40, and the lowest score you can get is 0. So I give the utility of this project maybe a 4. I mean, I like the idea of investing in some of these other projects. I'd like it if they got into some other big names. If they're just basically a DeFi as a service project, it'd be nice to see them in bigger names. But it is what it is. They are investing in what they are right now, and maybe they'll expand, and it'll be a better kind of DeFi as a service play in the future. So I give it a 4. In terms of team, no idea who the team is. No KYC, no audit, no nothing. There's some guy named Chad. That's all I know about is there's just some guy named Chad who invests in the project and people believe in him, and God bless Chad's soul. Next, we have the tokenomics. The tokenomics, as we just went over, they don't really make that much sense. It's too high. 564 annualized return on this kind of project is just a bit high. It's not really sustainable, especially when they're investing in projects that make far less than that. So the tokenomics gets a 2. And longevity, again, I give it a 2. I mean, it's not really that well put together. As I said, the white paper was just copy and paste. There's no KYC, there's no audit, there's no talk about it. All they're doing is buying into some other projects, and they actually refer to themselves in the wrong way. They're not a node as a service, they're DeFi as a service, they're an investment fund that's controlled by the Treasury, controlled by the investors into it, and that sounds like a disaster. I can invest my money myself. So yeah, I'm not really that bullish on this project. So the total study score on this project is 11 out of 40. All right, guys. So that's pretty much it. Thanks so much. Again, this was not financial advice. Do your own research for sure. I hope this can help your research. If you have any questions, comments, let me know what you think. And please, if you haven't already, hit the like button and the subscribe button. Ding that notification bell as well. And we'll be more than happy to bring you some more content like this. Until next time, ladies and gentlemen, thank you so much. Bye-bye. Hey guys, thanks so much again for viewing our wonderful video, and please don't forget to hit the like button and the subscribe button if you found value in this, and please ding the notification bell as well. Thanks so much. See you next time.